Ladies and gentlemen, welcome back to the channel and welcome back to another edition of AMC Stock, down about 2.05% here on the day. It's a struggle between positive and negative. We have had quite a big range at one point today, dropping to a low of $22.67 per share, now sitting at about $24 per share. So AMC continues to show a lot of resistance, and we got some data today. We got some information that definitely spooked the markets, some news out of Russia and North Korea, some news out of China. China did cut their lending rates today, which is not really a positive thing for America, for our stock market. And you also get earnings tomorrow from Walmart, Home Depot. These companies will pave the way, give us some light into what the consumer is doing and how they are spending their money, and potentially create more of those recession fears, or really shed a big light to the markets. If Walmart, Home Depot have good earnings, well, that's going to be an insanely positive thing, and I do expect a big move coming tomorrow. So let's get straight into this information. At the time of recording this video, AMC stock is down about 2.02%. Overall, I gotta say, it's a pretty bullish day relative to what happened during the start of the day. Like I said, you hit a low of $22.67 per share. You're sitting at about $24 per share right now. So you have seen a pretty big recovery. At one point, AMC stock actually did go positive on the day for only about a minute or two. So it wasn't a extended period of time where AMC stock was positive. But I think this is a good sign rather than not. A lot of other stocks are down a lot today, down 2 to 5%. That's not very unusual. Now, the S&P 500 down about 0.17%. It's a wonder how we're not down more, especially after this data that we got today. So it says home builders say U.S. is in a housing recession as sentiment turns negative. The key points: the National Association of Home Builders / Wells Fargo Housing Market Index dropped 6 points in August to 49. Anything below 50 is considered negative. This marks the 8th consecutive decline in the index. Quote, tighter monetary policy from the Federal Reserve and persisting elevated construction costs have brought on a housing recession, said NAHB chief economist Robert Dietz. So this is not a good thing, right? Everyone needs a house. This is a very large component of GDP, and the overall American economy is in the housing sector, in commercial real estate, single family, investment real estate. All of that is important to the market. So it's really a wonder why the markets are not down more today, given that kind of news, which is not good at all. You are also seeing some global tensions as of right now. You are seeing North Korea and Putin turning to a more friendship-like relationship. This is obviously not good for the geopolitical tensions, and that did have an impact early in the markets today, but it's not really sticking around. So that's really important. That's pretty much it as far as the data that we did get for today. The big story and what people are waiting for is Walmart and Home Depot earnings tomorrow in pre-market. I think this will give us a 1 to 2% up or down move in the stock market. Keep in mind that Walmart, this is a very weird concept, but Walmart actually lowered their guidance for this upcoming quarter, saying that consumers are slowing down. They're not spending money on discretionary items like TVs, like electronics that tend to have higher profit margins. A lot of that money is forced to be spent on food and things that are non-discretionary, right? Things you need. Think about discretionary in terms of, do you need this TV or do you need this food, right? The TV is going to be a discretionary item. The food is a non-discretionary item. You don't have a choice. You got to buy food before you buy a TV. The TV tends to have higher profit margins than something like a food product, so that's where you can get lower profit margins at Walmart, even though Walmart is seeing more visitors, more actual business. Just the products that are being sold are lower margin. So for Walmart, that's going to be the biggest set of earnings that we get tomorrow. And if Walmart, doesn't do good, that's going to be a big problem. And that's where you're going to get more fears about the consumer. Well, keep in mind, Walmart did lower their guidance. They also raised their full year profit guidance by a couple percentage points because more people are going to Walmart. So it's a very weird dynamic we have going on. In one sense, they lowered their guidance. In the other sense, they raised their full year guidance. So depending on what this earnings report has in store, you're going to see a big move in Walmart and you're going to see the markets react accordingly. Same thing for the Home Depot. I'm not as bullish on Home Depot as something like even a Walmart, just because what we're seeing out of home builders is not such a good thing. The whole do-it-yourself initiatives are starting to fade and go away as summer is really starting to die down, and you're not seeing as much home builders, not as much home building going on right now. So I'm not very bullish on Home Depot. I don't think that will have as big of an impact as something like a Walmart. And then Wednesday pre-market, 3 more important companies, Target, Lowe's, and TJ Maxx. These guys will also be very important. Give us that overall view of the consumer. Between Walmart, Home Depot, Target, Lowe's, TJ Maxx, you're going to get a lot of data about how the consumer is doing, what they're spending money on. So really today, or tomorrow, Tuesday and Wednesday, those will be the big days. You also have a lot of economic data that comes out, especially on Wednesday. But even tomorrow, you do have building permits, housing starts for July. And on Wednesday, you do have retail sales month over month at 8:30 in the morning. Fed Bowman, this speaks at 9:30 in the morning. And then you have the Fed minutes, which comes out at 2 p.m. This is a transcript of what was said at the last Fed meeting and essentially tells us what the Fed was thinking, why they raised rates, what they did, and essentially could give us a glimpse into what we can expect throughout the rest of this year if they plan to slow down or stop raising rates at all. So those are going to be the big things. That's really what can move the markets in a big way. As far as the Fed rate monitor tool, what the federal funds rate is pricing in down the line, you can see about 25% of market participants are expecting a 75 basis point rate hike, and about 75% of market participants are expecting a 50 basis point rate hike. So the higher this top line gets, if this goes higher, whether it's from the data we get tomorrow or the FOMC minutes, that's going to be a bearish thing. The higher this 75% line gets, this bottom line, well, that is going to be a bullish thing. Now, I don't know how much of it's already priced into the markets. The markets right now are in a very weird spot, right? It seems like the markets were already expecting the Fed to pivot, and that's exactly what we kind of got, right? The Fed said that they instinctively will slow down raising rates at some point in the future. And then the markets ripped. Like, it seemed like it was priced in because we had a rally before the Fed, and then that rally just continued. So it makes me believe that not that much of that Fed pivot was actually priced into the markets before the Fed meeting. Now, there's probably not any chance that the markets are looking right now and saying the Fed's going to go even more aggressive. So if we get that, if we get a more aggressive Fed, well, that is going to be something that is not priced into the markets, and that would, in theory, create a very violent move to the downside. AMC stock would not be immune to that, but it might hold up a little bit better like we are seeing today. Markets are trying to go green, and AMC stock is red. If the markets go red tomorrow or Wednesday or any other day throughout this week, it's possible that AMC stock does have a pretty substantially green day. Now, the short interest value in dollars is $2.24 billion. That is a lot. This number has went up, not because the shorts continue to pile onto their positions, which indeed they do, but the share price of AMC has continued to go higher. Now, the estimated short interest of free float is sitting at 17.76%. Free float out on loan at about 26%. Shares out on loan 134 million. Days to cover at 2.84. Cost borrowed at 8.84 and 100% share utilization. You have cost to borrow average at 9.23%, cost to borrow max at 10.79%, and cost to borrow minimum at 7.26%. So looking, pretty bullish in that regard. Those numbers could be a whole hell of a lot worse. Now, as far as the option activity, You are seeing 55 orders totaling $10.46 million here today. Positive order value of 87%. So this data looking pretty good. Could be, like I said, a whole hell of a lot worse. It looks like there's a lot of bullish activity taking place here on the option chain. If we look out on the expirations, this expiration looks very bullish. About 62% of the open interest is to the call side, but by September 16th, you're at about a 50-50 ratio, 50% of the open interest being puts, 50% of the open interest being calls. So it looks like over the short term here, people are pretty bullish, but over the next month, you start to get some of that bullish momentum starting to fade. Now, as far as AMC stock on a more technical basis, you can see we're holding above this key level at about $24 per share, currently at $24.06 per share, and we're well above the 200-day moving average. It looks like we might have broke this trend line just a little bit, but I'm not convinced that means anything. We'll have to see what ends up hashing out by the end of the day. AMC stock is only down about 1.5% at the time of this recording. Stocks like Apple continue to drive the markets higher. Apple up 0.40% on the day. Valuations just don't matter in 2022 historically. We're at about a 19 PE ratio for the S&P 500. And what happens when the markets get around a 19 PE is that's usually when the markets start to peak out. That's what happened, during 2008. That's what happened during 2018, 2019. All the really, like the crashes you have seen in the markets, it usually happens at about that 19 PE ratio on the S&P 500. Considering Apple is such a large portion of the S&P, over 7.25% of the market weighting of the SPY or the S&P 500, whatever terminology you want to use, it really makes what Apple does on a day-to-day basis very, very important. It looks like Apple's getting some more steam. Looks like the trading algorithms are in full control and in effective leadership positions. It really doesn't matter what hedge funds are doing right now, what retail investors are doing. It's all being traded through the trading algorithms, and they are controlling the show here. So there is that. AMC starting to get a little bit more of a pop as of right now. The RSI is at 70.05, so a little bit on the overbought side still, and the MACD is just extremely bullish. So I do think there is some room here to continue to make our way higher. So that is pretty much going to be it on the S&P 500. A key level you want to watch is the 200-day moving average. It looks like as of right now, this is not a bear market bounce. This is a bull market, ladies and gentlemen, especially if we can get above that 200-day moving average at 429.22. If we get any close above that, if we close above that today, tomorrow, any other day throughout this week, that is a change of trend. That is indeed a bull market. So that is all for this video. Hit that like button and subscribe to the channel if you guys have not already. Thank you for tuning in. Get your free stocks down below in the description with Webull, Moomoo, and Public. And if you guys want to come trade with me live in real time, link down below in the description as well. You guys enjoy the rest of your day, and I will see you in the next one.